Did you know that Apple just posted its fourth consecutive quarter of revenue loss? Astonishing, isn't it? But what does this mean for the tech giant and its investors? Let's delve into it. Apple, in its latest earnings report, posted $89.5 billion in revenue for the quarter ending in September. This marks a 1% decrease from the previous quarter. However, it's worth noting that this total quarterly revenue actually beat Wall Street predictions. So, even though it's a drop, it's not as bad as it could have been. Now, you might think that a revenue loss would negatively impact Apple's stock price, but in a surprise twist, Apple's stock actually rose over 2%. Furthermore, the shares have increased by an impressive 32.5% this year. This goes to show, sometimes the stock market moves in mysterious ways. Despite the slip in overall revenue, Apple CEO Tim Cook pointed out that the company saw record-breaking iPhone and services revenue. The revenue from services alone has grown to $22.3 billion. And with 1 billion active subscriptions across all products, it's clear that Apple's services are in high demand. The international market, specifically in countries like India and China, has posed a challenge for Apple. But it's not all gloom and doom. The company continues to strategize and find ways to penetrate these markets. This focus on expanding its global footprint is part of Apple's long-term strategy to increase the value of its hardware. In conclusion, Apple's fourth consecutive quarter of revenue loss may seem alarming at first glance. However, a closer look reveals a more nuanced picture. From its stock price to its services and international market strategies, there's a lot going on beneath the surface. If you found this video informative, don't forget to give it a thumbs up, and to stay updated on all things Apple and more, make sure to subscribe to our channel. We appreciate your support.